Hi, and welcome to this week's Mortgage Broker broadcast. My guest this week is financial advisor Jamie Benn, and Jamie has been on the podcast before. He came on sort of back in May 21, so it's over 2 years ago since he initially came onto the podcast, just talking about the world of transition, what he was doing. He was going from mortgage broker to financial advice. He then came on about 6 months after that to then talk about exams and things like that. But I wanted to get Jamie back onto podcast for a couple of reasons, really. One was about the need for the importance of having a relationship with a financial advisor if you are a mortgage broker. So I wanted to get him on to talk about that. And then also as well, from a point of view of really what the difference was between being a mortgage advisor and being a financial advisor, because he has been a mortgage advisor in the past, being a broker, worked in a bank, being an estate agency, now he's financial advising. So I wanted to get him on to talk about that because quite a few brokers I've spoken to recently have got it part of their plans for short term and long term to become financial advisors as well, become diploma qualified. So I wanted to get him to talk about a little bit about that as well. So yeah, let's just get Jamie onto the podcast. You're listening to the Mortgage Broker broadcast with me, Craig Skelton, the podcast which helps mortgage brokers at all stages of their mortgage broking career. So welcome back onto the podcast, Jamie. How are you?
Hi, Craig. It's great to be back. Yeah, I'm very well, thanks. How are you?
Yeah, very good. Thank you. And thanks for agreeing to come back onto the podcast. This is the third time you've been onto the Mortgage Broker podcast, but it has been quite some time since you originally on. And I'll explain why I wanted to, and thanks for agreeing to come back on as a guest. I know it takes time out of your busy diary being a financial advisor, but I want to explain why I wanted to get you back on. But it has been 18 months or so, nearly coming for 2 years since you were, it's certainly over 2 years since you were first on the podcast, and over 18 months ago since you were on the second time. So great to have you back on, and great to get your take on the life of financial advising right now. So thanks for coming back on.
No, thanks, Craig. Thanks for having me back. And yeah, it feels like a lot's changed in 18 months. It's been a busy point of time for me, but for the financial world as well, hasn't it? So we've timed it pretty much perfectly.
Definitely. No, certainly has. And I think that's the thing, like when I was looking back and thinking, wow, like look at what's going on in the world over the last 18 months, 2 years, from mortgage advice point of view, financial advice. I think it is good to, I think that there was sort of two reasons why I wanted to get you back on the podcast. One was to get your take on being a financial advisor now, because initially when you came on before, we were talking about the exams and the reasons why you were doing it and things like that. And then just 6 months in, and how things were going with your exams, and how you're finding that. Whereas now you are actually living, breathing financial advice every single day. So it's really getting your take on what the difference is between being a mortgage broker and being a full financial advisor. Because as I explained to you, one of the reasons why I want you to come back on was there's quite a few brokers that I know that are looking to get into full financial advice, go down the diploma route, and maybe they own their own firm and they've got a couple of advisor mortgage brokers in there, and they're looking to offer the full financial advice to their clients. Or there's a few sole traders that I know that just want to go into offering holistic advice to their clients, whether it be in a mortgage or pension or investment. So I wanted to get your real take on that world, but also as well, I just want to explain a little, explore a little bit more about consumer duty, and that sort of dreaded word right now within the mortgage broker space. But with regards to consumer duty, and with that in mind, about making sure that the importance of having a relationship with a financial advisor, making sure that and understanding the benefits of having that relationship. So yeah, I think that was about it in terms of it. So Jimmy, just before we get into that, just do a quick introduction about yourself for people that haven't listened to the episodes before. Just give yourself a bit of introduction.
Yeah, sure. So my name's Jamie Benn. I'm a financial advisor, which I've been doing for the last couple of years now. Prior to that, I spent 10 years in the mortgage world, various different locations. I've done through mainstream bank, I've done through independent, and estate agents, and I've kind of covered every field possible, I suppose, when it came to mortgages. So went on to the financial advice and pensions and investments, just to kind of keep searching for knowledge. And I suppose one of the main reasons I decided to make that change a couple of years ago was just to try and provide the proper holistic service to my clients. So probably a similar situation the people you've spoken to today are in, Craig, where when you are an advisor and have been doing it for a certain amount of time, you get to know your clients, you get to really understand them, get to like them, and you want to do everything for them and prevent them from having to duplicate and potentially receive bad advice from other places as well. So that's why I decided to take the step towards financial advice. So I can help a client from beginning to end. They don't have to go anywhere else. If they need anything to do with finance, they'll get in touch with me as a kind of almost a one-stop shop in their minds, where they can just give me a call and I'll be able to point them in the right direction if I can't do it myself. So that was what I always aimed to be when I started it. And I suppose that's a really brief summary of where my up and downs have been for the past few years.
Ups and downs.
Yeah, mate. Ups and downs, I think, is a very good way. Challenges, I suppose, is another way of putting it. But ups and downs, yeah.
I think that, like you said, I think the thing with it, you've had that banking experience in the mortgage world. We've worked in that environment. You've done the estate agency mortgage services. You've been self-employed as a mortgage broker, and then becoming a self-employed financial advisor. So you've pretty much covered every single base from where people are at from a mortgage broker point of view. So and I think that's why I value your sort of, and that's why I wanted you on the podcast, because I value your take on your journey, but also like the big difference between being a mortgage broker and being a financial advisor, because it's the same thing. From going as a mortgage broker, it's it's not just I've got my CMAP in my hand, I've got my qualification,
Yeah.
I'm now a mortgage broker. It's the same as being a financial advisor. I've got my diploma, I've whatever qualification you've got, I've now got my financial advice qualification, and off you go. You've gone through that steep learning curve of being a mortgage broker and getting qualifications and gone through that to then, I'm going to put it like drop off a cliff, because as you're going to explain, I'm sure it's just a totally different world. You've gone from knowing everything, and then you take yourself out of the comfort zone, drop off that cliff, and you've got to go through those challenges, like you say, those ups and downs again with regards to the exams. So so just stripping it back a little bit, Jim, let's look, I want to explore from a client point of view and from your point of view, the difference between mortgage brokering and financial advice. But how have you, with the exam point of view, how's that sort of been going? How's that gone? What sort of the challenges you face with the exams and the qualifications?
Yeah, more than I thought going into it, to be quite honest. I think there, as you said, we'll touch upon the differences between the two roles in a kind of day-to-day sense later. But from a purely business or even academic kind of standpoint, we are looking at a much wider situation when we're looking at your overall finances. We kind of, as mortgage brokers, and I was the same myself, we get a little bit get a little bit complacent sometimes in information that we're gathering from the client. And what I mean by that is, because we've got all of the information we need for a mortgage lender or to get that client a mortgage, we think we've got the fullest understanding of the client situation possible. And when you start to add a little bit more to that, and almost as if you imagined your lender had added an extra 4 or 5 pages onto your fact find of questions you've never seen before in your life, never even thought of asking a client because they weren't relevant to what you needed to know previously. Well, that's what you're getting, but you're getting it in different areas as well. So you're getting it not just in an area that you're familiar with, you're having to look into kind of complexities of things that you've maybe not dealt with before, a pension that's not been offered for the last 40 years for somebody that's being required, an endowment linked policy out off in the distance. So you're starting to add more and more different things to the mix of, you know, what you do need to know before you can be confident giving that back to your client. And I think one of the main differences is from an advisory point of view is being comfortable in that situation, being able to sit down with the client and say, look, I understand this. I understand what you're telling me on the situation is, but I need more time to go away and figure out from a tax perspective precisely how it's going to affect you, because it isn't just a this means this means this perspective. So I think that would be my biggest point from a learning side, despite the exams and everything else, which are difficult. You know, they're the same as any exam. They're designed to make sure you've learned enough. It's more of a mindset point of view that for me, it's being able to comprehend that switch of, I know everything. I know what every lender is going to say to me. I don't have to speak to them because I can tell you what they were going to say beforehand. To, I've never heard of that before, other than some paperwork that I read 3 years ago. Now I'm going to have to just ask you politely to leave that with me while I go away and look into it into more depth. And that's a strange thing to comprehend when you're used to being an expert in a topic. So I'd say that was the biggest challenge from a learning perspective. Time management matters a lot. Everybody's going to be in a different situation from what you can allocate time towards it. So there would be my two biggest tips is just make sure from a mindset perspective you're ready for the change and how much you're going to have to learn. And yeah, as I say, just make sure you leave yourself the time that you know you're going to need to understand it properly.
Excellent. Thanks for that, Jamie. And I'm getting understanding from your point of view the challenges you faced over the pit of learning a new industry. Really, financial advising is a new industry compared to mortgage broking. So, but when we look at from your point of view with your clients, what's the biggest difference, or is it several biggest differences between being a mortgage broker and being a full financial advisor? I know in my head I've got a few things that I'm thinking right now, short term, long term, that sort of thing. But what's been the biggest thing for you? Flicking that switch from I'm not a mortgage broker anymore, I'm offering full financial advice.
Yeah, I mean, personally, it's like having your handcuffs kind of taken off from behind your back, because as much as you're certainly never allowed to provide advice on anything that you're not qualified for. It's very key to point out, which is why a lot of us have our hands tied. So when you are in that situation as a broker and you've done it for a long period of time, there are areas when you're speaking to clients where you feel like you could give them some very quick, easy tips to probably put them on the right path and stop them worrying about different things, which you can't. So to then suddenly have that ability and be able to speak to clients honestly, openly, kind of just run through those conversations. A lot of the time you'll find that clients have had these thoughts for a long time, but they don't know who to discuss them with, and they're not quite sure whether there's anything that they can be done with them. So they're not that keen to bring it up to a professional in case they come across as stupid. When you explain that actually there's things that we'll need to go off and have a look at as part of an average fact find, we'll need to take at least 4 or 5 hours to understand a client's whole situation from a paper-based point of view. You start to just build up that trust with the client that they can ask these things and there isn't such thing as a stupid question. And there isn't something more rewarding for me anyway than being able to deal with those really big kind of challenging issues in somebody's life. A mortgage is really important. It's a commodity which allows somebody to have their home, and the home is really valuable to them. When you're looking at the retirement, the pension, the lifestyle, that you're looking more, you're getting closer to them as a person, you know, not just them on paper and what they can and can't afford. It's you're really starting to understand what that client does and doesn't want to do, what they value, what their aims are. sometimes whether they think they've only got 5 years left in them, and you've got to try convince them to have a look at a bit of a longer term. Sometimes the other way around, the people, you know, and it's a really interesting, challenging, but rewarding kind of part of the job is to be able to go out and meet a client on day one. I've had a client this week I've been back out to who, when I met him quite a while back now, he didn't think he was going to be retiring for a good few years. We're dealing with his retirement next month now. And he's never been more ecstatic. And there isn't a nicer way to leave a client's house and a client meeting than to be able to deliver that to a client while being open, upfront, honest. I haven't known everything about his situation. He's got a very old pension. We've had to take time to go away and look at in detail. Again, clear communication, good rapport with a client. It's a personal connection, not a business transaction. So yeah, I mean, I could wax on lyrical, I suppose, to be honest on that one. But yeah, it's a paradigm shift, to use an old corporate term. It's a complete kind of different universe of advice almost. That's how it feels to me.
So, because I think, like you say, I know you and I talked recently about a start in terms of people not knowing what their pension income will look like in the future, whether that future is next year, next month, in 10 years' time, 30 years' time, whatever that case may be.
Yeah.
However, going back to like what you sort of said, is that it's a very different shift, because as a mortgage broker, it's the home. You're talking about the home. You're talking about protecting the home. So it's a real tangible thing that you can see,
Yeah.
that you are getting and you are talking about. So the client, the thing is, when we talk about it, like from a mortgage point of view, a client needs a mortgage.
Yeah.
They don't want to get in debt. They don't want to get tens of thousands, £100,000 in debt. They want what that debt brings, which is their home, second home, holiday home, whatever that case may be, and making sure that is protected. Whereas from a financial advice point of view, you're talking about future, you're talking about what it's going to look like in the future, whenever that future might be. And I think that's the thing, is that clients don't look at that right now, because it's well, I've got my home, I'm like, look folks, I'm at the protection, and that aspect of it is bringing into the conversation the reality that, what's the stat, Jim? Is he said 95% of people do not know what their retirement income is going to be? Is that the case? Was that the number? What?
It was in and around, yeah. It might be been 97, but it was in and around that number, yeah. It's incredibly high number.
Which it is an incredible stat when you look at over 97% of people do not know what their retirement income will be and what their retirement income needs to be. Like, people just do not think about that. And it's about opening up the eyes, like you say, for that client that you talked about there, where they're thinking they were retiring in several years' time, and you're bringing that reality forward and thinking, wow, we can do this right now. I know every client's not going to be like that, but it's about having that conversation, so you're prepared for that. You're prepared for the future. You know what that looks like, and you're working towards securing that future. And it's the same. I won't take words out of your mouth, but like the best time to start a pension is today. It was years ago, but the best time to start a pension is today. It's not tomorrow. It's not putting off until next month or the month after. The best time to look and review your pension and making sure that you have got enough income for the future, for your retirement, is then, and that's like is now. And that's the reality of it, is that people think, and like you go to work and thinking, people look forward to the retirement thinking, oh, I'm going to do this when I retire, I'm going to do that when I retire. That's all great to have those plans. But if you've not got, because the state's not going to, what's the state pension? What's like that now? Is like you're not going to be able to live and maintain your lifestyle on the state pension.
No, you're not. And I think you've raised a really good point. And I think it's important to look at the flip side of it too, where this most recent client is a perfect example because he's over 60. His wife had retired a few years ago. He was the main breadwinner for the family. He had 2 adult kids. They'd moved out. Nobody left at home. He's got grandkids. Wants to spend more time with them. His wife's been wanting to spend more time away. They've had a new kitchen that they've been thinking that he's going to have to be working a few more years to pay for. He's come to me just wanting that end goal idea. How am I getting out in 5 years' time? When I'm 70, am I hanging my hat up and I'm gone? And we've been able to have the opposite conversation of, well, actually, you could retire tomorrow. We don't have any of your paperwork ready, so it's going to take us longer than that. But actually, from a financial point of view, you could retire tomorrow and spend more time with your grandkids. And what do you think he's done? Okay, Jamie, yeah, I want to retire as soon as possible. So there's a level where it could be one way, it could be another. I'd love if every client that came to me, I could go, yeah, not a problem, Mr. or Mrs. You're retiring tomorrow and you've got more income than you could ever dream of. You're going to have a lot of people the other way around. I'm sorry, it's going to be a few years, but at least we know when it's going to be, and at least it is going to be a few years. It's not, I don't know how long it's going to be, and it's going to be another few years when I finally kind of managed to bring myself around to look at it. So yeah, you couldn't have raised a better point, Craig. It's all about being able to have that open look at what's going on. You wouldn't let your mortgage sit on a standard variable rate. You wouldn't just think, oh, it's going to be fine because I can afford it. I'm paying it and it's leaving, so I'm just forgetting about it because I can afford it and I'm fine. Because you're going to be paying far too much. And it's the same with your pension. You might be paying far too little. You might be paying far too much. You might be just right in the middle. But the more options you can allow yourself to receive. And to look at this from one other angle too, as a mortgage broker, if you can offer these things to your client, I can't tell you how much your value to them increases and how much you do become. There isn't another person in my client's phone book to ask about mortgages or protection or for pensions or investment, whatever part of my business. They would call me and ask for it because they know that I've taken the time to explain everything to them that they've needed in the past. I've got their best wishes at heart because I'm not just asking how much they want to pay and this, that, and the other. I know the grandkids. I know what they want to do in life. I know what they've aspired to do. I know why they've worked. We can just have a really kind of open, honest conversation. And that makes things so much easier when it comes to need building as well. So if you're a broker that's struggling to deal with, a need and show a client that they do have a need in an area, it doesn't matter if they take something out to cover that need, but just to prove to them you do have a shortfall in this area. It's a free key to the city. You know everything about them. I know what your pension is. I know what you've got in various pots. I know what you could do if you could medically retire. I know what your mortgage is. I know what protection policies you've got. I don't need to ask you what would happen if you couldn't pay your mortgage. I can tell you this was exactly what's going to happen. And again, from a relationship point of view, that builds up the relationship. If I'm coming back to my client to explain that they need something, they know I've taken the time to understand everything fully. I'm not just trying to tell them to take something for the sake of it. It's something that they need. And I don't think brokers get an easier sale than when they've got a client of mine coming back to them saying, I have spoken to Jamie. We need to look up setting some income protection because he says I've got a massive shortfall that I've not noticed. So
I think it's a great point because, like I said, we were like moving on to look. We talked a little bit there about from a client's point of view, but the idea behind that is waking up, and this has been sort of quite blunt, but waking up mortgage brokers to the world of financial advice needs for their clients. I think that whether you want to do it yourself or you want to refer to somebody, which we'll come on to,
yeah,
it's important you're having that conversation to then and waking mortgage brokers up to then look at what are the benefits to them, what are the benefits to the client in terms of working with somebody. Well, let's first of all working with somebody that they know and trust. So in the world of consumer duty and holistic advice and doing the right thing by clients, and I've talked about it so many times before, the importance of having somebody that you know and trust to refer to. Maybe you're not the expert on financial advice, you're not the expert on equity release or wills and estate planning, but you having somebody that you know and trust and that can turn to, and also as well ask questions as a broker to that financial advisor on behalf of your client, or maybe just for your own peace of mind, knowing that, well, what does that look like? How do I introduce it? What do opportunities look like? How do I refer? And all those those sorts of things. But it comes back to the one thing, which is about, and you hit a little bit there, is about mortgage brokers waking up to the fact that I need to work with somebody that I know and trust for every single aspect of my clients' needs within financial services space, where, like you say, and that what the products that are out there, because having somebody, you you can you'll see brokers, I'm sure you will say, none of my clients will ever have 200 grand to invest or 500,000 to invest. You don't know that, first of all, because you don't know what's going to happen. But
Yeah.
secondly, when that does happen, and if that does happen, the person they refer to is the mortgage broker that then refers to somebody that they know and trust. Because if they don't, well, what's the consequence if a mortgage broker doesn't work with a financial advisor? What is the consequence to them as a mortgage broker with their clients?
We'd have it all easier than clicking our fingers, mate. Is the honest answer. If we wanted to, we could take everything. We could take your protection that you've done a year ago, and again, if you're really trying to dig down to the bones of it, think of how much detail we've got now from an income expenditure point of view to justify any changes that we might want to make to your protection recommendation. Think of then from a client perspective, after they spent 4 hours with me, I've gone away and spent 6 hours of my own time. I understand every part of the pension. I understand every insurance product they've taken out. I know exactly what their future plans are. I know when they want to retire, not when the mortgage term ends. I know exactly how long I need to put in force the policies, various different things. It's the easiest piece of the cake. I can take absolutely everything from you in one fell swoop, and I doubt you'd get a phone call because we've spent so long in that relationship with the client. And I don't want to take anything away. I don't want this to sound like I'm taking anything away from brokers. We offer a really valuable service, and as somebody who's done it myself for such a long period of time, I did feel valued by my clients, and I did feel like my opinion was valued, and I think it was. But there isn't anything that can compare against a really good hour and a half meeting, maybe from a mortgage side. And maybe if you're lucky, you might have another hour further down the line. That's 2.5 hours versus 10 hours of kind of solid research, analysis, and discussion with the client. Of the two, they're always going to take our advice. So, yeah, I think from a wake up point of view, you're absolutely right. If you don't have a financial advisor at the moment, you're getting very lucky that none of your clients have bumped into one, because you'll certainly notice the first one that does go, because it'll all go. It will be everything all together at once. And I'm not saying it's right, and I'm not saying it's wrong either, because from a client point of view, they're always going to do business with who they think's got the best interest at heart and who's giving them the best service. But don't take the risk. We've all got to work so hard for our clients, and we work so hard for them when they are our clients as well. It seems like such a waste and a shame for the sake of a phone call to not even introduce them to somebody like myself who can have a really brief conversation. If there isn't a need at that moment in time, introducing themselves, telling them what you can do, giving them a point of contact, and just saying, yeah, well, in the future, Derek will be giving you my number if you win the Euro Millions, or as you're planning your pension. You don't want to do it this year, but if you have to see Derek in 2 years' time to do your mortgage, let me book something in my diary too, and we'll do it roughly the same time, save as duplicating stuff. you can treat people like a real human in the same way you'd want to be treated. If you had to sit down for 4 hours and review your own pension, how would you want to do it? Would you want to do it with somebody that you thought had your best interests at heart, wanted to have a proper discussion, get to know you, or would you want to make it pure hell? So just bear in mind that we need income too, and there's a lot of income when it comes to generating pensions, investments, etc., etc. But if a client stumbles in from the wilderness to us and hasn't been referred from anywhere, and it's an open book where we can go at it, there's nothing to prevent us doing it. We're just looking out for the interests of the client. If we find a cheaper policy, we can knock some years off the term that they need, whatever it may be. Again, we've got a big advantage. So certainly keep it in mind. If it's not something you're doing already, it's something you definitely need to be considering.
I think the big thing that you said there, Jimmy, and I know you're being harsh with, like I say, not taking anything away from mortgage brokers. Brokers will be sat thinking, no, I do a good job for my client. I do it like I do, and that's fine. And I accept that. But the one big word you put in there was risk. And it's like whether you want to risk that from a client point of view. So you've got choices as a mortgage broker to look at. Do you not work with a financial advisor? Let's walk down that path of not working with a financial advisor. Your client who you've done the mortgage for, you've done the remortgage, you've got protection, you've got all those sorts of things. Then they wake up today and go, do you know what? I need to get my pension sorted out. I need to make sure that I've got and something will trigger it. Maybe their friends or maybe some family or something will trigger them to think, I need to get that sorted out today. And the thing is, they need to understand that your client needs to understand that you're the person that they're going to go to. You can't do it and talk about it and actually you've got somebody you can refer to. So if you do that, then if they do think that, that's great. But if they don't, what they're going to do, the first thing to do is look on Google, look for a local financial advisor, talk to friends or anything like that. And all of a sudden, like you say, is the reality of that is then they're then sitting down with you for several hours talking about their life, their need, their long-term, what they're wanting to achieve and all the rest of it. And they see that mortgage as a transaction to get that home, but they're working with you now for a long time because you're going to be speaking to them every year and you're going to have in that relationship with them and you're looking at long term for them. You're putting that at risk because then you're going to be talking about the mortgages, you're going to be talking about protection. You've got that's a client that's reached out to you, just direct to you. They found you on Google. You get people clients coming direct to you for various reasons. And that will be some mortgage broker's client that's coming to you. And then all of a sudden, the mortgage broker then gets a notification about a clawback. They don't answer the calls for the remortgage, and all of a sudden you've lost the client because you've not had somebody that you work with. And like you say, you were not disrespecting the mortgage in terms of the role because that's what you do. You do that as well. But I think giving mortgage brokers the harsh reality that if you don't do anything, you have choices. If you don't have to work with a financial advisor. You're just pointing out the consequences if they don't, that this could happen. If they do work with a financial advisor that they know and trust, it can just enhance their service and their proposition because it's going to retain the client. A mortgage broker, you work with mortgage brokers who refer clients direct to you, Jamie. You don't take the protection, you don't take the mortgage, you just focus on your aspect of why they're referring to you, which is the pensions and the investment and the long-term future retirement that they're looking for. If you do spot opportunities, like you said, which you've done, and I've seen this firsthand, you refer it back to the initial broker and sort of say, there you go, there's a need for income protection there. And it's that relationship and communication. And if you don't have that and you don't have that marriage from a referral point of view, it's a risk. And you're just giving them the harsh reality of the risk that what can happen if they haven't got somebody that they're working with. So
and I think I'll keep this one brief, but you mentioned about triggers before, and that's a really good point actually, because one of the most common things that we get are when people move into higher tax brackets. So when they move into a higher tax bracket, people start to get a bit unhappy about having to pay the higher levels of tax. So they might be speaking to us about pension contributions to see how they could mitigate that and increase starting rate band and what have you. Well, if the tax bracket's changed and the income's gone up, then if they had income protection before, then it needs rewriting, or there's a reason to rewrite. If they've never had it before, then it's a perfect link for income protection. It's the quickest thing for me to be able to refer back to you guys. I don't sit there and just go, oh, well, you need income protection then. I'll build the need with the client. I'll explain to them, this is why I'm looking into it. This is why it's important. This seems like it's a suitable fit for you. I'll send you back to Daisy, who's passed your details through to me. She's got everything to do with your current mortgage policies and what have you. She'll look into it and she'll update your policy for you. Boom. Again, easy money. It's one of those things that maybe they haven't come directly to you in the past. Maybe you've tried in the past to get them to take out an income protection policy or critical illness or life insurance policy, and they've got a shortfall that they're totally unwilling to even accept exists. Well, again, send them to us. We'll explain it to them. We'll show them the facts of where these shortfalls are. I'm still not going to be doing the life insurance policy by the end of it. If it's your client, it's you that's going to get the win out of it. We're here for a reason. We're dealing with his pension, dealing with any investments. We're going to give him the best advice he's going to possibly receive from it. But at the end of the day, he's your client. If there's a product that you can provide him, you're the one that's going to be providing them to the client. So we've in the nicest possible way, I would rather all of my clients came through a mortgage broker and were very happy with that mortgage broker and the products and services that they received. Because a good mortgage broker is worth the weight in gold to us as advisors as well. Because at the end of the day, we want the same thing you do. We want your client to leave happy. We want them to leave with a full understanding of what they've got and why we've done it. A mortgage broker can take a lot of that worry away from us, where we can start dealing with the hard-hitting stuff relatively quick in the process. We know that the mortgage is being dealt with. We know and trust that broker as well to have given proper financial advice, the correct level of financial advice, the correct products that you provided already. That means we can go into the meeting with a high level of confidence and just give the client what they need from the outset. So I would say that you're offering value to your client. You're offering value to yourself for free. Let's say, if you can say to your client that they can go off and they can see somebody like myself, or they can run through it in detail, and you're not having to pay us to do anything to do with it. It's like another benefit that you can offer your client, even just the initial conversation. I'm not going to say that we work for free. We don't. Just the same as you brokers won't as well. But we'll often have an initial chat with a client without any expense to them. And if there's just a real quick need that needs just a little bit of tweaking, maybe, that might just be the difference between that client kind of leaving completely satisfied and I've had everything given to me that I possibly could have needed from that mortgage appointment, to calling me up a few months after it and potentially rewriting the whole lot.
Absolutely. I think the thing is, it goes back to client retention. Like you said before, brokers work so hard to attract clients, to get leads, to generate clients in the first place, build trust, build a relationship, all those sorts of things. But like one of the stats I said on the podcast a few weeks ago was about 50% of clients go back to their original mortgage broker when their remortgage is due, which is shocking. That is absolutely shocking. And I think when you look at it, when you sort of take the blinkers off a little bit with regard to, my clients don't have £200,000 sat in a bank account somewhere. It's not about that. It's about the client relationship. 97% of people do not know what their pension is going to look like. That's a big figure. That's the thing. And so I know like the relationship you have with brokers that you work with, that you've got that you've done pensions for clients of those brokers. as a financial advisor, you're sending out an annual report if they're on a minimum level in terms of service. If they're on the max level, then you are meeting up with them. They are getting a lot more of it. But the brokers are integrated with that from a client retention point of view as well, because your client, from a client retention, if you're a broker, you're thinking, I've got to make contact with them every year. What do I talk about? I don't know what to say. Like, I want to make sure that I'm retaining that client. If they then know that they're going to get a annual statement through, like annual report through from you about their pension or their investment, you can piggyback on the back of that with regards to contact from a broker point of view as well. So it's all about client retention, and I think that's the harsh reality of this, is not just sort of seeing it as a transaction of, well, none of my clients ever have. I know there's a client that you work with that would never in a million years have ever thought he would have a payout like he got and received. Never in a million years. However, he did. And when he did have that, he knew who the first person he was going to speak to.
Yeah.
So it's about thinking, well, what happens if this happens, who's the first person I need to think about? And it's within financial services, it should be original mortgage broker. Obviously, working with you is with the broker and the financial advisor, but it's a case of, if you're a broker, you're thinking, whatever happens. So I'm working today thinking, I need some pension out. Okay, I need to ring Craig, the mortgage broker. I need to ring him just to find out what I need to, what can I do about that? That's a great place to start, rather than Google of finding the best financial advisor in Wetherby or wherever the case may be. And so it goes back to that client retention with it as well. So it's not only looking at client retention, it's looking at client service. And the last thing we want to look at is income, because as you said, we are in this for the service, and providing the right service for the client, income will look after itself. And this is one of those things. If you're providing the right service, income will look after itself, because 97% of your clients do not know what their futures are going to look like. So you can't tell me you've not got an opportunity to refer your client to a financial advisor. I'm not saying you're going to refer 97% of them, but certainly there's going to be opportunities in there by you putting those triggers in that client's mind to sort of say, you need to be looking at you. And it is those quick wins, like you've talked about, you and I have talked about, from a fact find point of view. It's those two questions. What are those, like you can say, Jim, what are those two questions when you're fact finding from a mortgage point of view that can help to then get referrals to pensions?
It's easy. Have you got a pension? Do you know how much it's worth? Or do you know how much it's valued at this moment in time? And I can guarantee it'll be less than 3 people every 100 that'll give you a yes to the answer to both of them.
Yeah. Nobody's going to say yes. Very few people are going to say yes to both, it, like you say. And it's not having that conversation in your fact find when you're talking about the mortgage. It's signposting that for your client and for yourself, thinking, have you got a pension? Yes or no? Well, if it's a no, you need to be getting one. So that's one thing you need to get sorted out. If it's a yes, is it on track? I don't know. Okay, well, let's get you talking to somebody that will talk to you about whether it's on track or not. And that's, again, so if you get 2 yeses, then I'd question that anyway. But you might get 1 yes and a no, or you might get a no. Well, you need to be referring to a financial advisor. Absolutely. 100%. And I think the thing with, I know there's a lot of financial advisors out there that don't do mortgages, don't want to do mortgages, never got any inkling to do mortgages. They stopped doing mortgages years ago when it became a little bit more difficult. And that is a sweeping statement, but that is fact. And I know
no, that's fair.
But from your point of view, you know what it's like being a mortgage broker firsthand. You understand the challenges that mortgage brokers face. So being a financial advisor, you know what you've got one foot in the mortgage broker camp anyway, so you understand from their point of view. So you're not detached from the mortgage broker world from a fact find point of view, from a client need, from the challenges of placing cases and rates and all the rest of it. But yeah, it's just And sorry, Jim, we digressed a little bit, but I think that the thing, one thing we'd like sort of was going to allude to was about income, because again,
Yeah.
referring to a financial advisor, we've gone through all the other benefits. We've gone through the consequence if you don't.
Mhm.
The last one is income.
Yeah. Well, I mean, the easiest example is the case we've talked about today of my client who's retired 4 years earlier than he expected to. That would have been worth just short of £3,000 in referral commission to whoever would have sent it across if it had been referred.
Wow.
And this is from a chap who's retiring 4 years earlier. A fantastic client outcome. You know, the client's ecstatic with the outcome of it. It's not like we're there trying to cajole money away from a 95-year-old woman or anything. The client is barely blinked, to be quite honest, from their side, because it's such a big thing for him to have the income he needs in retirement, to retire 4 years earlier than he expected to. If it costs him a few quid up front, he's more than happy, as all financial advice does. So back when I was a mortgage broker, which was a while back now, but I wouldn't have been shoving my nose up in the air for a £3,000 phone call at any time of the day. I don't reckon I might have even picked up at midnight. So, and again, from his side of things, this wasn't a client that was referred, but well, it was referred by one of my own clients. So from a relationship point of view, I've maybe had 3 or 4 meetings with this client, but he's a lovely man that we've just had a nice chat with, and he's managed to see exactly what he wants to do with the firm, see his dream moving forward in terms of what he needs to retire. He's achieved all of that. We've managed to do well out of it from a firm perspective in terms of, you know, we've got a happy customer outcome and we've charged a fee. And even better, because his mortgage broker's never referred him over to us, I don't have to give away any of the commission either. So it's one of those where it really is a significant portion of income that can be allocated towards you. We are not precious. I mean, from my side of things, if I have a relationship with a broker and a client gets in touch with me 10 years later from kind of one introduction that they'd got and another little kind of push in the direction a few years later, that's fine. You know, I wouldn't have got that client without you pushing in my direction. But it's not really going to give you much chance of getting many clients to me, and it's probably not going to give me many chances either. We're happy to dish out the commission because we're earning too. All we want is the volume through the door. We just want the opportunity to sit down with your clients, have a discussion with them, see if there's a need. If there is a need, help them with it. That's all we're aiming to do. And when we do see needs in this side of business and the pensions, the investments, the bonds, anything that we're looking at, inheritance tax planning, they're all needs that have a time scale attached to them, and they're all needs that aren't bog standard. They're not need you wandering down to your local pub and listening to the barman to see what their best opinion is, and then going, all right, well, I'll go ahead with that. They're serious issues, and they matter incredibly to people. So, yeah, I suppose what I'm trying to say is as we've said from the start, and as you agreed with, the income's always going to be there if you do right by the client, because it's the way the business works. But the more opportunity you give yourself to earn from the back of this, the more income you are going to earn. The more people that you signpost and do a proper job of kind of saying, well, I'm not just going to go, oh yeah, call this bloke. Why? Oh, you've got to, otherwise you don't get a mortgage. I'm building up a relationship with the client by saying, I've got a useful asset for you to use here, and it sounds like you actually need to use that asset right now because you haven't got an idea of where you stand. So have a quick chat. Maybe it's just a 10-minute chat from our side, and we'll relationship build. Well, for us, been a fantastic relationship with the client that we're starting to work through. Great relationship with you, and hopefully in the future we'll get some business from it. For you, you've offered yourself the opportunity to earn more income, because if you hadn't have made that introduction, you wouldn't be earning more income. You've safeguarded anything that you've sold that client already, because once they've spoken to one of us, I can guarantee you they don't want to spend 6 hours sat down with another financial advisor running over exactly what we've run over. And you've given yourself for the future another client that, whether it's me catching up with them, you catching up with them, whether it's, okay, Mr. Client, actually right now, all you need is me to give you a little push in the right direction, tell you top up them pension contributions just a little bit and put that money in an ISA. But in 2-3 years' time, when you have topped that money up and you're coming at me with a bigger pot and we've got this and your income's changed and we've got this, that and the other, they appreciate the time that we give them as for free. You know, we charge an hourly rate from this side of the business rather than charging a fee to complete. So if we're offering appointments to them free of charge initially to get a basic understanding, it's all a great service. So it's all positive. There isn't a negative from your perspective, other than maybe what you could have decided yourself as evil financial advisors maybe up to. And if that's the case, sit down, have a chat with us. I'm sure Craig will have our contact details on there as well. I'll have a chat with anybody about how our process and system works, because we're the same. We're just people. We just do a job that 99% of the population would find terribly boring, and but that's all it is. So yeah, I would just say it's all wins. Sit down and speak to somebody. If it isn't me, speak to a financial advisor in your area and just get an understanding of what it is that they want to do. Because if they have the right motivation in looking after your clients, you'll do well by them, and your clients will do too.
Excellent, Jamie. What a summary at the end that was.
Just in case everyone skips 50 minutes, I always talk too long. So in case everyone just goes to the end, they can go, all right, okay, that's all.
Yeah, I get the gist of that. No, that's fine. Jamie, I think that, yeah, thank you so much for your time coming onto the podcast. I think it is a great way to end the podcast based on what you've just sort of said there. If anybody's, we will tag you into the post. We will make sure your contact details are on the post in terms of when the podcast is released, so people can reach out to you. And if you, like you say, if you are just questions at this stage, just looking to build a relationship, then yeah, just I'm saying reach out. They can reach out to you, and you can sort of start to build that relationship from there. And they say start to retain your clients better, but also as well offer that holistic advice, which you might not be doing at this moment in time. So, Jamie, thank you very much for coming back on. Been, like I say, nearly 2 years. So thanks very much. A lot has changed, but thanks for agreeing to come back on and sharing 45, 50 minutes now of your precious time in the world of financial advising. But Jamie, yeah, really appreciate it. It's been good to get you back on just to explain on what's going on in the world of financial advice and the consequences of not working with somebody. So thank you so much.
No problem at all. Thanks for inviting me back, Craig. It's been a good chat.
Thank you for listening to the Mortgage Broker Broadcast, the podcast which helps mortgage brokers at all stages of their mortgage broking career. If you have any questions about this podcast or any topics you want us to discuss, or if you're interested in working with me further, then please get in touch.